Hi guys, welcome. So today I want to look at the context of the market, and I also want to show you a bit of very important basic analysis skill sets that you should always use. And I'm going to show you another pattern that we haven't discussed yet. Okay, so the market today looks like really it's showing a small red candle. As I said yesterday, it's possible that the price might continue to go downward and hit one of these supports, or if not, it can or be already respecting this 20 moving average and it can start going up. But as of right now, there's not an extremely clear indication with a pretty solid probability that the price is going to go indefinitely down. I still don't see that. For the Dow Jones, it's the same thing. There's really no clear indication as if the same thing as the S&P 500 to know where the price can go indefinitely towards this 40 or 50 moving average, but you should be prepared that when it does happen to have ready a bullish order. And same as said, if the price continues to go up 90 degrees, let's say, then you want to be cautious for a short trade. Okay, so the NASDAQ is falling. It doesn't seem to be respecting the 20 moving average, but it is still in the middle of the day. This could change to a green candle, and it might actually maybe might engulf this previous red candle. But if the price does make a lower low and hit this 40 moving average or get close to it, which it pretty much is, that could be likely that the price would want to respect it. Or what could happen, which is another possibility, is that the price might actually go to this level. It might actually go to this price level at 17,068. And it's because if you look at this, the price over here went up, but it respected this level. And then the next time the price went up and it kind of respected it and it went down. The next time it broke above it, but when it went down, it went close to that same level. So what I think is going to happen again is that if the price does continue to go down, it would want to meet this support again, which is pretty close at the 50 moving average. So be ready for that because that could also happen. And believe me, if it does hit this level, it is very likely that the price will not continue to go down, but it will actually rebound and go up. So be ready for any sort of entries in the NASDAQ or companies inside the NASDAQ doing this similar pattern. Okay, so the market today kind of is in the same context as it has been the past few days, where there's not an extremely clear indication where the price wants to go. However, what's important to know is that the candle frame that we're looking at this is on daily, but we can look at it from another perspective. So what's good to have is if you want to see where the market is in its context and you don't know what context it's in right now with the current time frame, then it's good to look at a wider perspective. And a wider perspective is to look at it from a wider time frame, so that could be weekly or monthly. In this case, if we look at weekly, you can see that the S&P is way above from the 20 or 40 moving average. What does this indicate? Well, in a technical standpoint, it's not a very ideal place looking at a weekly time frame that you want to enter a lot right here because the price is very far from the 20 moving average. It's going to be inevitable that the price would want to come back to this average because it needs to. However, the market is not black and white like this. Sometimes the price can be way above the 20 moving average, but it doesn't meet the 20 moving average exactly. You can see that happen in 2021, right? It continuously went up for the next 5 months, and that could happen again. But that doesn't mean, now if you do look at this, that doesn't mean that the price would, let's say, not get very close to the 20 moving average, because that's what happened here. In fact, it did go down to this. Over here went down to the 20, but for the next, from November all the way until, well, March and from September, the price went to that 20 moving average. Over here, the price continuously went up from November. Now it's March. Can it come back down? Possibly, right? Because anything is possible. Because the price is far away from the 20 moving average, and it's because the price went up so fast in a short amount of time that it didn't leave enough time for the 20 to move up with it. And it's also because of this price decline. The price declined at this area, and because of this decline, the 20 went down, but it had a sudden rise. So the 20 is trying to really catch up, but the price cannot continue in this way. Now, just because weekly shows that it's likely to go down does not mean that it's going to indefinitely go down, because we need to look at it from all sorts of perspectives. So looking at it from monthly, on monthly, it's the same. Monthly, it's far from the 20 moving average as well. And as you see, like even in 2013, because this was 2013, the price continuously went up. And 2017, it continuously went up. Same with over here. This was the biggest rise of all from 2020 to 2021. Can this happen again? Very likely, because the price, look, we haven't seen this sort of decline at a long-term view since, arguably since 2008. So not even COVID, because COVID was very short. This is the most normal and longest downturn we've had since 2008, and it's likely that the price would continue to go up as it has, because it needs to recover what it dropped. So that's why I say you need to look at this from a bigger perspective and not just in this sort of area. Sure, looking at it that the price is far from the 20 makes it more prone that the price will come back to the 20, but that does not mean, recall that the 20 needs to catch up. So what's going to happen, likely, I am going to tell you that's going to happen, is that the 20 is going to catch up. It's going to rise in the next month, and the price would decline shortly in our views. But it's not that it declined shortly. It's just because the 20 was able to now catch up a bit, and now the price declined a bit. That's what I would say would happen most likely. What I don't think would happen likely is that the price would go down now more to get to the 20. The 20 has to catch up now because the price has gone up. So in this context in the market, if we try to view where the market will go in the next month or 2 months, looking at it from a probability, it's likely that the price, looking on weekly, it's likely that the price would continue to go up, but maybe not in such a long amount of time. Maybe for not such a big amount of time. I said back in January that it's likely that the price would go up 90 degrees, and it has already. It has like 70%, but I still think that there's a little bit more that it can go up. But I do believe that we should be a bit cautious that it can go down once it starts to go up, because of what we saw in weekly and monthly. But that's why I'm letting a little time for the price to go up, because the 20 moving average has yet to catch up to the price. To catch up. You see, it needs to catch up a bit. So that's why I think there's a bit more room for the price to go up. Okay, so the pattern that I want to talk about today is on PayPal. The reason why I want to discuss PayPal is because PayPal is showing a pattern, and it's called a pennant, right? This is how you pronounce it. It's called a pennant. A pennant, it can happen in an uptrend or it can happen in a downtrend. But in this scenario, PayPal is in a downtrend, right? Prices are making lower highs and lower lows. The way how you can identify a pennant is whenever, in this case in a downtrend, is whenever the price has gone down and then it's gone up, but then it makes a sudden stop, right? It goes down, but you start to see that the price starts to make higher lows and lower highs. Then the next time it makes lower highs, but higher lows. So you can see that the price is really starting to become a bit more narrow. Once the price starts to become a bit more narrow, some people call this a squeeze, but this is what's called a pennant. What's likely to happen is, and this is the same thing, kind of what we talked about yesterday, the market's trying to decide where the price would go. Once the price breaks within these levels, whether it's above or below, all that momentum and volume would proceed and push the price to go down. Okay, so this right here at this area would be the entry. And the entry here, you would want to identify a bearish signal pattern, and vice versa. If the price breaks above, look for a bullish pattern. Right now, that's happening because the price is making higher lows, lower highs, higher lows, right? And now what's happening? The price is breaking below it. It's breaking below it with a bearish pattern. And if we look at the volume has been receding. So, and that's good because look, this shows that there's an indecision. There's not much activity. That's why the price has been not making higher highs or high lows. There's still decision. But right now, with this sudden breakout, there could be a lot more volume. So this is likely to push the price down on PayPal. And that's how you view pennants. Now, to view a bullish pennant happens when you have the price, like in this context, that the price is making higher highs and higher lows. So higher highs, higher lows, higher highs, higher lows, higher highs. But look at what's happening here. The price is making higher highs, but right here it's making higher lows, lower highs, higher lows, lower highs. Look, you start to see this out of this area. Once the price breaks whichever direction, look, once it broke it right here on this candle, you would have entered an entry in options, maybe a call or a long position, set your profit target, and you would have been successful. Exit with a profit. Okay? So what you can do is, I just want you to kind of practice on this, look at several stocks, find one of these patterns and test it, because pennants are pretty powerful. They definitely lead to a lot of great directions, but sometimes, be aware that in pennants, there could be false breakouts, like in any sort of pattern. Recall that a false breakout happens, at least in a pennant scenario, so it would be like this. A false breakout happens that if the price breaks above this line, but then it comes back down, this is a false breakout. So in order to prevent a false breakout, at least for you to prevent an entry in a false breakout, it's to find a lot more higher volume to proceed, and that the candle price is showing a bullish signal pattern. In this case, if it's breaking above, if it's breaking below, you want to see a bearish candle pattern, or else it's likely to be a false breakout and would let the price to go up, right? And once there's a false breakout, this isn't a pennant anymore. This is now just a general consolidation, right? So that's the thing about pennants too, that sometimes it would seem like a pennant, but if the price does a false breakout like that and you don't see any more lower highs or higher lows, and now there's sort of like lower highs but sort of same lows, this is now just a general consolidation. But nonetheless, pennants are powerful when they stick with this sort of sequence. That's it for today on the preview of this lesson. Remember, if you have any questions towards trading or investing, you can feel free to book a personal meeting with me down in the description below. And yeah, hope you guys enjoyed. I'll see you guys tomorrow.